You know how sometimes you just catch a headline flitting across your screen and think, huh, that sounds important.
Yeah, happens all the time.
Well, earlier this week, Tuesday, May 27th, 2025, there was definitely some significant financial news. Came out of India, actually,
Hmm.
specifically around a cornerstone of their aviation sector.
Right, IndiGo.
Exactly. We're talking about IndiGo.
And it wasn't just some minor reshuffling, was it? This was a really substantial transaction. Got a lot of people talking naturally, considering how dominant IndiGo is in the Indian skies.
Absolutely. So we're diving into the details of a massive sale of shares by none other than IndiGo's co-founder, Rakesh Gangwal.
Hmm.
The number being thrown around is pretty eye-watering. Artha 11,385 crore. That's what,
Yeah.
over $1 billion US?
It's a staggering figure.
And just to give you some context, right, IndiGo isn't just another airline. They're kind of the big dog in the yard there. They command around 60% of the domestic air travel market in India.
Yeah, huge market share. So when a player that size sees this kind of, financial activity from one of its founders, well, it's definitely worth digging deeper.
Totally. It's become such an embedded part of how people travel across India. You see the planes everywhere.
You do. So when something of this scale happens,
Mhm.
involving someone so central to its creation, yeah, you really need to understand what's going on beneath the surface and what it might mean down the line.
Okay, let's get into it then. Our goal here isn't just to throw numbers at you. We want to unpack the specifics of this share sale.
Right, the mechanics.
Then we'll explore the why, what could be the motivations behind this move, and ultimately the crucial so what, how might this impact Indigo, the broader aviation industry, and maybe even, your future travel plans.
That's the right way to approach it, I think. It's about piecing together the story behind the financials and seeing the bigger picture, more than just the numbers.
So the main event happened on Tuesday, May 27th, 2025. The key figures, as we mentioned, are Rakesh Gangwal and, well, an entity with a rather memorable name, the Chinkerpoo Family Trust.
Ah, yes, that name does stand out.
Hmm.
What's particularly interesting, though, is the sheer volume of shares that changed hands. We're talking about 2.2 crore equity shares of Interglobe Aviation. That's IndiGo's parent company.
Right, and this wasn't like a gradual process selling shares bit by bit on the open market.
No, definitely not.
No, this was what's called a block deal. From what I understand, that's when large investors trade massive quantities of shares all at once, usually in a prearranged transaction, right?
Exactly. The price for these shares was set at a minimum, a floor price of RN 5,175 per share.
Okay. And when you're dealing with this kind of money, well, you bring in the heavy hitters. Goldman Sachs, Morgan Stanley, and JP Morgan reportedly facilitated this entire operation.
Makes sense. When you're talking about a deal exceeding $1 billion, you need those big institutions.
Hmm.
They have the capacity to handle that scale efficiently and with discretion, too. Their involvement really highlights the significance of this sale.
So this single deal saw a whopping 5.7% of Indigo's total ownership change hands.
5.7%. That's quite a slice.
Yeah. That means Mr. Gangwal's personal stake in the airline has now come down from, what was it, 13.5%?
Correct. It's like a substantial piece of the ownership structure has just shifted.
And interestingly, the shares were sold at a bit of a discount, about 4.5% compared to where they were trading the day before.
Which isn't uncommon in these big block deals.
Right. And as you might expect, that had an immediate effect on the stock price.
It did. The market reacted pretty quickly. IndiGo's stock price on the NSE, the National Stock Exchange of India, saw a 2.2% dip, settled around 5,301. That kind of immediate downward pressure, well, it often happens with large stake sales. Sometimes it suggests, a potential increase in the supply of shares, or maybe even a hint of uncertainty from the seller, perceived by the market at least.
And there's this intriguing detail, a 150-day lockup period,
Ah, yes, the lockup.
where Mr. Gangwal and his immediate family can't sell any more shares. However, and here's where it gets really interesting, there's a specific exception
Go on.
for a potential sale of $300 million or more, but only to a single investor.
Wow. That's a fascinating carve-out, isn't it? It suggests they might be looking for a very specific kind of buyer for any further, significant stake reduction.
Like maybe a long-term strategic partner or
Yeah.
another big investor who could bring more than just cash.
Could be. Or maybe just simplifying the process if another large chunk needs to be sold. It's definitely specific.
Okay, so we've covered the mechanics of the deal. Now let's talk about the who and start to get into the why. Rakesh Gangwal, of course, co-founder of IndiGo.
A huge name in Indian aviation.
You simply can't discuss the evolution of Indian air travel over the last couple of decades without acknowledging his absolutely central role. I mean, he was a driving force in building IndiGo into the dominant airline it is today.
Absolutely. Alongside Rahul Bhatia, Gangwal really had this vision for a low-cost carrier that just clicked
Yeah.
with the Indian flying public.
Mhm.
Indigo's success story is deeply intertwined with Gangwal's leadership, his strategic thinking.
But it hasn't always been smooth sailing, has it? Remember that very public disagreement back in 2019 with his co-founder, Rahul Bhatia?
Oh yes, that definitely made headlines.
It revolved around corporate governance practices and transactions with related parties. It was quite a talking point in the business press at the time. Some called it the siblings fighting over samosa spat a bit colorfully.
Right. That period certainly brought to light some, let's say, underlying differences in how the company should be run. Gangwal raising those concerns was significant, and it did ultimately lead to some adjustments within the company's operational framework.
So fast forward to December 2021, and we saw the removal of restrictions on transferring shares between the founders.
An important step.
Then, in February 2022, Mr. Gangwal stepped down from IndiGo's board.
It was a big signal.
Yeah. These moves strongly suggested his intention to gradually reduce his ownership stake over the coming years, and it's clear now that he's been following through on that plan quite deliberately.
Yes. This recent sale isn't an isolated event at all. It fits into a very clear pattern. The Gangwal family reducing their holding in the airline over the past couple of years, it's been systematic.
Just to really grasp the scale of this, let's quickly look at the timeline of previous sales. So, September 2022, Rakesh and Shobha Gangwal sold about 2.74% of their stake.
Okay.
Then, February 2023, Shobha Gangwal sold another 4%. August 2023 saw roughly 2.9% go. March 2024 was a significant one, Rakesh Gangwal selling 5.83%.
That was a big jump, too.
And then last August 2024, the Chinkerpoo Family Trust sold 5.24%.
Wow.
When you add it all up, the Gangwal family has sold off shares worth well over Rs 40,000 crore since 2022.
40,000 crore. That's an enormous amount of value unlocked. It really underscores just how substantial their initial holding was, and, I suppose, the extent of their planned disengagement. It's a major shift in the ownership dynamics of one of India's most visible companies.
Now, we have to circle back to that incredibly distinctive name, the Chinkerpoo Family Trust.
Right. You can't just gloss over that.
You really can't. You hear that and you wonder, what's the story there?
It certainly sticks in your mind. Now, while the specific origins of the name aren't publicly known, unfortunately.
Too bad.
Yeah. But we do know that this trust is managed by Shobha Gangwal and, interestingly, J.P. Morgan Trust Company of Delaware. So it's clearly a key vehicle for managing a significant portion of the family's wealth, especially their IndiGo shares.
Chinkerpoo. It almost sounds like, I don't know, a beloved character from a children's book or maybe a special family nickname passed down through generations.
Could be. It definitely adds a sort of personal touch, a human element, to what is otherwise a very formal, very large financial transaction.
It does. It lends a certain unexpected quirkiness to the often quite dry world of finance. Makes you curious about the personal stories wrapped up in these massive financial decisions.
Absolutely.
Okay, so we have a good understanding of the what and the who. Now, for the really crucial question, why now? What makes this particular moment, May 2025, the right time for such a significant sale?
Well, the timing does seem quite deliberate, strategic even. IndiGo has been enjoying a period of really strong performance recently.
Right, as I saw.
Their stock price jumped by, 18% in 2025 alone? And it had reached a 52-week high just before the sale was announced.
Wow.
And on top of that, the company reported a very healthy quarterly profit, over Rs 3,067 crore for the quarter, ending in March 2025. That was a substantial jump, like 62% compared to the previous year.
So it looks like a classic case then, selling when the market is high. When your asset is performing exceptionally well, it's often a smart time to realize some of those gains, right?
Exactly. It allows for diversification of their overall wealth. It potentially opens up opportunities for, new investments or, as we discussed, perhaps a gradual move towards retirement planning for Mr. Gangwal. From a purely financial perspective, it's a logical move, given the company's strong performance and the high valuation of its stock at that point.
It's also interesting that the final size of this deal was actually larger than what some initial reports had suggested.
Oh, really?
Yeah, some sources hinted at a slightly smaller sale, maybe around $1.1 billion initially, but it was ultimately upsized to the $1.33 billion figure.
Ah, okay.
Yeah.
That really indicates strong demand then, doesn't it? from investors. Likely those big institutional players, FIIs, DIIs, foreign and domestic institutional investors.
Must be. They were clearly keen to buy even at that price level.
That increase in the deal size? Yeah, it definitely speaks to the contingent confidence that these major investment firms seem to have in IndiGo's future prospects, even with a significant portion of the founder's stake being sold off.
Which leads us nicely into IndiGo's current standing and, well, where they appear to be heading. They are the undisputed leader in the Indian market, fleet of over 316 aircraft.
A massive fleet.
And they're not standing still, are they? They have ambitious plans. Expansion, including flying to more international destinations.
That's a big push for them.
And introducing a business class offering. That's new for IndiGo, supposedly later this year, November 2025.
Yeah, moving beyond their pure low-cost routes.
And even bringing in wide-body aircraft by 2027 for longer-haul flights.
That strategic move into new markets and different service categories, it signals a significant evolution for IndiGo. Moving beyond that traditional low-cost model to cater to, premium travelers and long-haul international routes, it's a noteworthy development in their growth trajectory.
Now, we did see a slight dip in their net profit back in June 2024, apparently driven by increased operational costs, fuel maybe.
Could be. The aviation sector is inherently subject to various pressures. Fuel costs, competition, currency fluctuations, lots of variables.
True. But it's also worth remembering that the collapse of Go First back in 2023 did, perhaps inadvertently, create a slightly more favorable environment for IndiGo in terms of pricing power for a while.
Yeah, the exit of a competitor like Go First naturally had an impact on the market balance. Less competition often means fares can stabilize or even rise.
Okay, let's try to synthesize all of this, bring it together. What are the broader implications of this significant stake sale? Mr. Gangwal's ownership is now considerably reduced.
Down to around 7.8%, if my math is right after this sale.
Right. Although Rahul Bhatia and Interglobe Enterprises, the other co-founder group, still hold a very substantial portion of the company.
They do. Their continued large stake provides a degree of stability, you could argue, in terms of control over the company's direction. And remember, this sale by Gangwal, it's what's known as a secondary sale.
Meaning the money goes to him and the trust, not into IndiGo's bank account.
Precisely. The proceeds go to the selling shareholders, Gangwal and his trust in this case, not directly to IndiGo itself. So it doesn't have an immediate impact on the airline's day-to-day finances or its cash reserves.
Okay, that's important. Now, the market's reaction, that relatively small 2.2% drop in the stock price, it seems open to a couple of interpretations, maybe.
I think so.
Some might see it as investors feeling a bit uncertain about a key founder further reducing his involvement. Like, does he know something we don't? That kind of feeling?
That's one way to read it, sure. Any significant shift in ownership, especially involving a founder, can introduce a degree of perceived risk or just questions.
But others might simply see it as a natural market adjustment. After such a large volume of shares changed hands, a bit of short-term pressure is normal.
Exactly. And it's also a common and, frankly, understandable practice for founders who have built significant wealth in one company to diversify their investments over time. It's prudent financial planning.
This definitely aligns with that broader trend we often see. Founders, after creating these massive successful enterprises, they choose to spread their wealth across different asset classes. It's just, fundamental wealth management strategy, isn't it?
It really is. Now, for what many of our listeners might be wondering, will this affect my next IndiGo flight? Are we suddenly going to see sky-high ticket prices or a change in the in-flight service because Rakesh Gangwal sold some shares?
Yeah, the practical impact for the passenger.
In the short term, I'd say the direct impact on the average passenger is likely to be minimal, probably negligible.
Okay.
IndiGo's operational strategies, their pricing, their service standards, those are driven by much broader market conditions, competition, their own internal business objectives, not really by the specific shareholding percentage of its founders day to day.
Yeah, sense. For investors, though, it's a slightly different story. IndiGo has been a strong performer over the long haul, delivered pretty impressive returns, actually, over the past 5 years, something like 461%.
It's a very strong run, yes.
And the continued interest from major institutional investors, shown by them snapping up these shares, suggests they still see significant growth potential.
It certainly seems that way. But, as you pointed out earlier, the gradual departure of a key founder like Gangwal does bring up some interesting questions. Questions about the future leadership, the long-term strategic direction of the airline, especially as they move into these new areas like business class And wide-body planes?
Yeah, it's a different bowl game than just being the dominant low-cost carrier.
It is. This period of transition, with Gangwal further reducing his stake and the airline branching out, it will be worth watching closely. How the leadership team evolves, how they navigate the increasingly competitive landscape, particularly in that premium segment, those will be critical factors in IndiGo's ongoing success story.
So when we boil it all down, Rakesh Gangwal's significant stake sale in IndiGo is, well, it's more than just a big financial transaction. It's a really interesting moment with multiple layers of context. From the personal journey of a co-founder, maybe moving towards a different phase, to the broader dynamics of India's rapidly growing and changing aviation market.
Exactly. It marks a significant point in the IndiGo story. And it reflects these broader trends we talked about: founders managing their wealth, continuing investor confidence, particularly in the Indian aviation sector, which still has a lot of growth potential.
Okay, so here's a final thought for you to consider. Given IndiGo's continued dominance, its ambitious plans for the future business class, long haul, and now this further shift in ownership with Rakesh Gangwal stepping back, what could this signal? What might it signal about the next chapter for the airline and maybe the overall trajectory of air travel in India?
That's the billion-dollar question, isn't it?
Yeah.
Or maybe the $1.33 billion question in this case.
Aha! Indeed. It'll certainly be fascinating to observe how things unfold. Keep an eye on the skies and keep an eye on those business headlines.
For sure.
And that concludes our deep dive for today, hopefully bringing some clarity to a complex topic quickly and thoroughly.